on average, if people are looking to get those kind of loans or deals from other investors, what kind of interest rate do you think they should be looking at?
In terms of borrowing money or lending?
Borrowing money.
Yeah, when you're borrowing money, you want to pay the lowest possible rate, don't you?
Yeah, but I mean...
So I think when it comes to investor money, you have to... There's a lot of different things to think about. And when someone just says to me off the cuff, what is it you pay? I said to them, between 6 and 16%.
Yeah, that's what I'm going to talk about. I mean, if someone's out there thinking, I want to borrow 100 grand, I get this, I ask this question a lot from our viewers and followers. How much interest should I pay?
Well, let me phrase it a different way. If you're going to borrow 100 grand from the bank, right, what interest rate would you pay?
Well, if you go to Lloyd's, for example, you're looking at 4.5% above it.
So you get 4.5%. So how would you expect it to be different, or what variation do you think would it be with a private individual?
Well, I think because there's less checks and balances, they're taking more risk, possibly the issue of security. So you're looking at least 8%, if not higher.
Okay. So then, with the more risks, the security, the less checks and balances, the more variation there is, the higher the rate becomes.
Yeah.
Yeah. And that's, I think, the key part. It's not just how much is it, how much money, and what rate. There's all these other underlying things that will determine.
Which obviously knocks up the rate, doesn't it? Yeah. Because obviously, if somebody's got a first charge, the rate might be 7%, for example.
Exactly.
If they haven't got first charge, 1% a month.
Yeah, and I've got stuff that where we've got 4%, 5% we're paying on first charge. From private individuals, and you can do that quite easily because that's still a lot more than what they get in the bank. And the money's very, very safe.
It's secure
in that structure.
That's right. If you give a first charge,
So it all depends how the deal is structured. I think that's absolutely key. And the reflective of the risk.
Yeah. So I thought, kind of just to add my 2 pence worth is when people ask me that question is, I say, don't worry about what the interest rate is. Look at the deal. How much are you making? From that, how much are you willing and able to pay to make the deal happen?
Yes.
Because if you've got to pay 1% a month, okay, which is 12% a year, most people gasp, I've got to pay 12%. This happens all the time, by the way. You've got to pay 12%, but you're going to walk away with, let's talk hard numbers here, by the way. So let's assume they bought £200,000 and 12% and it's just for a year. You're paying £24,000, but you're walking away with 100,000, okay, after paying the cost. What's your problem? Why are you worried about how much you're paying them?
I agree.
Get the money, do the deal.
With bridges, they look at it the same way. So bridging, I guess, is a form of private money. They're just more sophisticated in their approach. And if a bridger typically is charging you, say, 1% a month, or 12%, as you said, and sometimes people go, that's very expensive. Plus all the fees and charge and everything else you're going to pay on top of that. Realistically, it could be 14, 15, 16%. It translates into as a true cost. But actually, as you just said, if you're making 100 grand out of it and you're not putting much of your money in very little money or very little risk, then that's still a decent transaction.
I see a lot of people can't get over that barrier because they're thinking
it's not logical because
Lloyd's charge 1.5%, 4%. But I think you're not working with Lloyd's because Lloyd's probably aren't interested in giving you money because when they give you their tickets of all the stuff that they want, okay, of all the information, you probably haven't got half of it anyway, and you're going to fall through the cracks. And then, as you know, inevitably, one of my frustrations is obtaining finance. I'm doing it all the time because we're working on so many different deals. It's a nightmare, Saj. It takes, they'll say 8 weeks, it takes a year. It takes a bloody year. I'm working on one right now. We've been at it since March. And they said, end of August, we promise you'll be done. August gone, September gone, I think October's going to go as well.
And during that time, the criteria can change as well.
Of course it does.
And then you get to the end and it isn't what it was initially going to be.
But it can do. So these 20 units, which is the pub, you think the end value would be around 2 million?
Probably.
And
that will be the main building itself. Then we've still got the land at the back.
Which we should develop. So what kind of profit margin are we looking at on that?
I think I would always look at 25% plus as a margin, really.
And are you going to keep those, or are you going to sell them?
We'll probably keep those.
So refinance, pull your money out, pay off the investors.
Because it's a good rental. We were talking just before we started. It's almost like property for free.
It is.
Why wouldn't you?
It is exactly, yeah. And have you invested any of your funds in that particular deal?
No.
Okay, so that's
not what I had is back out.
Okay, so you got.
I just swap it with invested money.
So the house is done. Pub's done.
Yeah.
Any other developments you're working on?
Not developments right now that we've started. So we've got several house projects, HMOs and regular kind of stuff going on and flips and things. Over the last year, we've probably done less than what we would do ordinarily. And I think that's primarily because just the deals just don't stack. But I think that will change in the coming months.
Okay, cool.